Hey there, my name is Tim, and this is my review of Al Brooks, his price action methodology, and the way he teaches it. First of all, just the usual disclaimer you hear at the beginning of every trading video. If you're thinking about trading, trading involves substantial risk of loss. It's likely if you get into trading, you're going to lose money, so think very carefully before you do it. Also, this video just represents me. I don't know Al. I'm not related to him. I'm sure the guy is totally unaware of me. So this video is just my views and my views alone. And just a quick introduction to me. I started trading about 2 years ago, and I was using a different methodology, and I blew through a small account, which of course really made me bummed out. So I took a break from trading, and I came back about 6 months ago, and I knew there had to be a better way. And that search to a better way led me to Al Brooks' price trading methodology, which is why I'm now doing this review of it. Since then, I've become a much better trader, I'll say. Of course, I can't speak for Al Brooks, but if you listen to him, the guy used to be an eye doctor, and he got into trading, and he was trying all these different methods for trading as well. He found that some worked, some didn't. None of them worked all of the time. And so he went from being a doctor to being a full-time trader. And he was to develop a price action trading methodology to which he's been able to become quite successful now with, at least in this trading. So what is price action? Instead of me trying to give a big long description of it, it's probably easier just to show a video. So I'm going to give a quick example from his trading video of what it looks like.
Here's an example. We have a strong bull spike and then a channel, which is a much weaker bull trend, and you can draw a trend line below. You can argue that it's a wedge top. We had a failed breakout above the top of the wedge, and the market is starting to reverse down with a second entry short. The sell-off fell below the trend line, and it tested the moving average, and it lasted a lot of bars. So there's reasonable selling pressure in here, enough to make traders think that we might get a more serious reversal after testing the prior high of the bull. Within this bull spike, you can say the bull spike lasted from here to here, and within it there's a smaller spike. A lot of times there are nested patterns, patterns within patterns. For example, here's another small bull spike, and again the same channel.
All right. So don't worry, you don't have to understand that of what he's trying to explain, but that's just what price action looks like and the way he teaches it. So basically with price action, all bars have meaning. That there's no such thing as noise. That basically you're using the left hand side of the screen to better predict what's going to happen on the right side of the screen. That every bar has a particular meaning. And so when you string all of that together, you're able to formulate a larger meaning which helps you better predict what's going to happen next. And that's what price action is. And I'd say it's comparable to learning a new language. For instance, for me, I'm English and I don't speak Japanese. And I think going through this is the same effort if I were to learn Japanese. That is, it's going to take at least 1,000 hours worth of study and at least 1,000 hours worth of practice before I even start to feel competent being able to speak Japanese. And this price action, it's no exception. And that's not an exaggeration either. It's going to be 1,000 hours of study, 1,000 hours of practice before I'm even a capable person. So with Al Brooks, I want to go over both his good side and bad side of using his trading. I'll start off with the good side. It's the most accurate description of market activity that I've seen. That is, when I've looked at other trading systems, and I've looked at a good number, but of course not all of them, that some of them were just bunk, some of them were good, and some of them were right some of the time, but not all of the time. And I found his to exceed all others. Okay, of course that's my judgment, my opinion alone, but just that Al has the best grasp on how markets actually work. It's also affordable. I mean, it's very affordable. For me, I think I spent around $250 on his videos and about $150 on his book. So it cost me around $400. Now, and for the knowledge you get, I think one of the absolute best deals out there. I mean, his videos have dozens and dozens and dozens worth of hours worth of information, and his books are just jam-packed full of knowledge. And when I compare that to other trading methods and classes, where they charge a couple of grand for a weekend course or something like that, I think what he provides is one of the best deals out there. And furthermore, at least on his videos, he gives a satisfaction guarantee policy that if you buy them and you don't like them, you can get your money back. And as far as I know, he's the only trading course which actually provides that. I think that's just fantastic. There's also an active community, so it's pretty easy to find other traders who are using Al Brooks' pricing methodology. So you can have conversations, you can go back and forth with questions, they can refer you to other resources, so that you can learn a lot more. So since there's an active community, it's very easy to work with other people of your same skill sets and motivation and build up together. It's also detailed, I mean, sometimes achingly so, that the guy goes into so much information. I've heard him say that given one chart, he could just talk for an hour on that one chart, and I believe him. That he provides so much information, and it can be overwhelming at times, but there's certainly no shortage of information. And when I follow the guy on his daily forum, he's right more than he's wrong. Now, he's certainly not right all of the time, and nobody is, but he does have some very good perceptions into the marketplace on what's going to happen next. And he's not that he's right. You can bet on what he's conjecturing, but he is right more of the time than he's wrong. And more of the time, he's able to accurately foresee the next move in the marketplace. And of course, I find that very valuable. The guy doesn't make claims. He doesn't say, hey, had you followed me, you wouldn't be able to make all this money. Let me give you an example here. This is an email I got. All right. Had you followed these guys, supposedly you could have made a profit of $1,700. All right. Let's blow up this chart. Okay. So on this trading methodology, they identified this as a sell zone. So you can see the market fell, came back up. Had you sold here where they identified, then the market went down. You kind of bought back, and then you made this boatload of money. Yippee, great, right? So the thing I don't like about this is it's so easy for confirmation bias or cherry picking. I mean, I can make 10 trades. One of them will be good, and just show that one good trade, and claim you could have made money following me. All right. To fully judge this, you have to understand the full picture of all their trades that they're making, not just supposedly any one trade. And I'm not picking on these guys. Just I'm picking on anybody who uses that as a method. And it's a bit counterintuitive, but because Al doesn't make claims, he doesn't say, hey, if you follow me, you would have made all this money, or if you would have done what I've been doing, you'd be rich by now. He's just saying, hey, this is what I'm doing, and I hope it can help you become a better trader. And in some ways, I find that a very strong proposition, more so than the grand promises that a lot of other trading methodologies make. On the good side, so the guy is a 30-year trading veteran, and it definitely shows. I mean, the guy has a ton of war stories. He has an encyclopedic knowledge of past charts and past trends and what's gone on. The guy remembers all sorts of setups and different activities and all the exception cases. And it just shows, not only does it show that he's been trading for 30 years, but it shows that he's been passionately trading for 30 years, that he genuinely enjoys it. And so all of that great passion and knowledge, it comes out within his instructions. And there's plenty of examples describing how. Let me compare this to what. So sometimes when I've seen other people's trading methodologies or the companies, they're very prominent on what I call the what information, but not the how information. So let's say they give an example of trading with the MACD indicator. So they go on to describe the components of the MACD, the what goes into it, and what it can mean, but they don't give any thorough instructions of how to use it. That is, the information they're providing I could easily read off Wikipedia or on some 10-minute YouTube video, but they're not demonstrating the MACD of how to make profitable trades. Al, on the other hand, he goes into extensive detail, all right, on the how part. And like I said, sometimes it's painfully detailed, but he certainly provides a lot of it. Also, I like this. He sets himself up as a teacher, not a guru. Kind of my interpretation of him is he seems to be saying, hey, this is what I do and this is what I teach. If you like it and it helps you become a better trader, great. If not, well, okay, I don't care. And so the guy, he's really not trying to sell anything or make money from you, like you might see in a guru. It's just saying, hey, here's my knowledge, and if you can use my knowledge to become more profitable, that's great. I hope that's the case. But if you don't find my knowledge valuable, so be it. It's no skin off my nose. And so the guy is really not trying to sell you anything or talk you into anything like you might see in some gurus. And in some ways, he can be kind of a good virtual mentor. And at the bottom of the day, he can help you form profitable trades. So I'm day trading, and like when I trade, like last week, on the normal day, I had 3 trades, and all 3 of them were profitable for small amounts. And on a busy day, a couple weeks ago, I had 9 trades, and 7 of those were profitable. 1 was for break even, and 1 was for a moderate loss. But I still made good money overall on the day. And now I'm able to do that, and I'm able to do it a lot more consistently because I've been using Al Brooks' methodology. And furthermore, it's not causing me stress when I trade. Let me tie that into the last point. That Al, in his teachings, he ties it back to your happiness. It's just not about making the money. As for instance, I have a friend, and when she trades, she gets 20 to 30% of her trades right, and she loses 70, 80% of the time. But when she makes money, I mean, she's making big money. She's making 5 to 8 times the amount of her risk. So the big trades or the big wins she has outweigh all of her minor losses. And for that, she's doing good. Now, if I were to trade that way, I'd be depressed. It doesn't matter if I'm making money. If I were looking at all those losses, I'd be crushed. I just couldn't emotionally handle it. And Al, he's very much into having a trading methodology that only makes you money, but it's consistent with your personality, your emotional temperament, and at the end of the day, it's making you a happy and better person. And so I appreciate that he has the ultimate goal in mind. So what you'll learn the likely movement of the market. Overall, the market is stochastic, meaning that what happened in the past will influence what happens in the future, or that it has a feedback loop. And these examples of weather. If it rained yesterday, it's more likely it's going to rain today, say 70%. Now, it's not guaranteed, just more likely. And because the market is stochastic, by looking at the past patterns, you can have a better handle of what's going to happen next in the marketplace. And Al Brooks, whose price action methodology, will help you learn that. Also, the guy includes the details. I mean, this is where the rubber meets the road on where you get in, what your profit target should be or how much you should make, where you should place your stop, and if it starts to go against you, how you manage your loss. And this is the very specific information you need on how to make profitable trades, and he very much emphasizes these points. And he also goes through the risk, reward, and probability profiles very clearly. So on any trade, there are these 3 components. How much money you're risking, all right? What your reward potential is, and what the probability is of that trade being successful for you. With these 3 factors, then you can not only make good trades. And he's constantly emphasizing these. So let me just go over an example of this. And let's say you're looking at this chart and you're right here and you're forced to make a decision. You have to either buy or sell. What is it that you're going to do? One or the other. So you can take a look at, say, the sell case. So say we're in a tight trading range that if you drew a box from this corner, say to this corner, that's the range. You broke out of the range, then you came back into it. Okay, this bear bar has a lot of momentum and also has a very small tail at its head, implying more momentum towards the bear case. If you're looking at it the other way, the bull case, you could say, well, we're definitely on an uptrend here. And look at this. We're going up, then a small leg down, up again, a small leg down, going up, and this could just be another small leg down. And this could be an exhaustion bar as well. All right. So you can think of both cases as to why you should buy or sell here. For me, I would think, I'd probably be buying here. I'm thinking the uptrend is going to be more likely, probably about a 60% chance. If I were to buy here, I'd set my stop right here beneath, just one tick beneath the most recent high or low, pardon me. I'd start in small and perhaps I might scale in as I see a bit more going on. And that's an example of Al Brooks' price action methodology, how you can interpret this and make profitable trades. Now, on the bad side, I just don't want to say the good side. And on the bad side overall, it's minor stuff. The good stuff way outweighs the bad side, but like any trading methodology, there are trade-offs involved, and I just wanted to go through those. The biggie is there's no courseware. That is why there's lots of knowledge. I mean, it's like drinking with a fire hose. There's no mechanism to reinforce that knowledge within you. So going back to my example of learning Japanese, you're learning the language, and let's just say you have a book on Japanese in front of you. Okay, but you're not in the class, so there are no written exercises. There are no tests. You're not talking with fellow students so you can practice with each other. You're just reading this book on Japanese, and you're learning it, and hopefully you're pronouncing it right. All right. Now, I can understand why there's no courseware, because to do a competent course would probably be at least a 2,000 man-hour project, and it would probably take 3 quarters to teach at some community college. And that's just way more effort than what Al Brooks signed up for. But because there's no courseware, you're getting all this great knowledge, but there's no exercises or no mechanism to reinforce that knowledge so it stays within your head. So it provides one half of the equation, but not the other half. And so you kind of have to be creative of how you're going to retain that knowledge within you. And typically what a lot of people do is practice through a lot of charts. And while that's part of the equation, it's not fulfilling the whole thing. I'll say it's not easy. It's certainly difficult for beginners. Let me go back to one of my pictures. Boom. So here's one of his books. The Technical Analysis of the Price Action for the Serious Trader. And let me emphasize serious. Man, it is serious. It's intense stuff. And so if you've never started trading before, you're not going to get it, at least for a while or a long time. It's going to be difficult. And even if you do get it, it's still tough. Right? No one ever said this was easy. And at any one point, you can find both a reason to buy and a reason to sell, such that sometimes you can see them with such clarity that you can't make up your mind between the two. Let me give another example here. So here, this is a paradox. Buridan's ass or donkey actually predates Christ. And it's about this donkey who's thirsty and hungry, and he's equally between a bucket of water and a bucket of hay. And he can't make up his mind which one to go for first, so he ends up dying just because of lack of decision. Sometimes price action trading can feel so much like that, because you can see both the reason to sell and the reason to buy at the same time. And mind you, you're never going to see a really, really, really compelling reason to do one. I mean, as an example, let's say there's a great reason to buy. Well, in order for you to buy at any particular point, someone has to sell to you. And for that person to sell, they have to have equally great reasons why they should be selling at that particular point. Okay? And so because these points can always come out with such clarity, it can be difficult to make a good decision between the two. Al's ego. For me, this is kind of a giggle more than a bad point. But the guy, he has the ego of a doctor because he used to be a doctor. And sometimes that comes out in his comments and in his trading. It's a minor issue. Like I say, I think it's a little humorous. But yeah, I'll say the guy certainly thinks of a lot of his abilities, that's for sure. Books are difficult to read. Let me go through another example here. Not that one. Hold on. Okay. I just scanned this in. This is from a current page I'm reading in this book. Now, you don't have to squint. I'm going to read this paragraph to you right now. A small bear bar can also set up a counter-trend trade in a trend if it occurs at a swing low and there are other reasons for trading counter-trend, like a prior trend line break. Bar 3 was a swing low, a reversal up from a low 2 short, and a second leg down of a second leg down, making it a high 4 long setup. Bar 5 was a high 2 after a strong move up to bar 4. It broke a trend line, making a second leg up likely. It was also at the low of a trading range. All right. Whew. So, you can tell you're not going to gloss over that when you read it. I mean, for me, I've spent up to 20 minutes trying to understand one of his pages. And man, this is a 350-page book. And so it's you have to go through each one of these and consider each point. And man, his books, they're a slog. They're not an easy read. And they're not fun to read either. And so you really have to be into it. Now, you will gain a lot of knowledge. They're fun, but I mean, they're as boring as any college textbook you'll run into, that's for sure. The next, language of acronyms. I feel like it's almost serving in the military. They use so many acronyms. Here's the page on his website and then the acronym dictionary. All right, and blah blah blah. I mean, do you want to remember all of these? And there's probably at least 300 to 400 here. So I'm going to his website. So he's going through the price action for today on this chart. Mercifully, they expand out the acronyms here. But just on this very first bar that he's describing right here, you have an opening reversal. You're at the 50 moving average of yesterday, consecutive wedges with the double top, SA. All right, bar 3. Can you imagine just trying to read this on the acronyms? COH with an SA near W. All right, bar 6. You have an H2, but an HL. You're still within the CH, around the HOY after CC with the W of Y. Good luck with that, man. So going through those acronyms can be dense and irritating at times. Now, Al doesn't provide proof, and a lot of times he just claims because it works. If you come out of an engineering background like me, you're used to providing proofs. That is some assurance that it's going to work the way you say it's going to work. And Al, a lot of the times, or none of the time actually, it doesn't provide proof. Now, given this guy, he's a 30-year trader, he's very successful, and he knows what he's doing. And so when he says something works, I honor that. And I found out he is usually right, and he does know what he's doing, so I like it. But if you want proof that it works, you're not going to find it. It's not like Al goes through a bunch of cases and tests them to see if he's right or wrong. Rather, his claims just come from his own operational knowledge and the success that he's had. The guy, he also makes assumptions. So as a for instance, he'll be describing some of the market activity, and just like as a for instance, he'll say how, let's say the bar only went down 4 ticks, not 5 ticks, because there were outstanding bears out there, and the bulls wanted to trap the bears, so they went ahead and bought, so they wouldn't get the 5th tick, so the bears couldn't get out, so they had their trap. Things like that. Now, there are two ways to interpret that. One is that he's making inappropriate assumptions, and he's only seeing it through his lens. All right, and his assumptions aren't valid. Or the other one is the guy, he has such grand vision that he's able to see around corners that me as a novice trader can't see around. Now, I think it's more likely the second case than the first case, but if you don't understand those assumptions, they can certainly be irritating. So, overall, my conclusion? You can definitely be profitable, but it's not easy. You have to be dedicated. Like I said, I'm prepared for 2,000 hours, and the group I trade with, they say that they had to put in 5,000 hours before they even started to feel comfortable, and 10,000 hours before they start to feel some level of mastery with the subject. All right, it's that tough of a road to go down. You can make the money, and you can definitely get good stuff out of it, but boy, it's going to be an intense effort to make it through, I'll say. It's also, I think, the most realistic trading system out there. I like it because Al is always going over the probabilities of risk and reward, and it allows you to make very intelligent trades when you see through that lens. And that, well, as I've taken a look at other trading systems and I've tried to work them, essentially all their trading systems, I found they're perfect some of the time, but you never know what some of that time is. All right, so you make money some of the time, you lose some of the time, and I don't have that issue with Al Brooks' trading methodology. Like I said, and you're right more than you're wrong. Certainly, you're not immune to being wrong, as Al is at times, but overall, you can see that he's accurately predicting the marketplace, and with those accurate predictions, making money is certainly very possible. All right, that's it. Hope this was helpful. Leave me some comments. Cheers.